Hey folks, breaking news for March 12th, 2025. So the news that's coming out right now, we have this CPI, the consumer inflation numbers that just came out. We're going to go over that here real quick. And then I'm going to show you market reactions. Well, spoiler alert, everything's looking green right now across the board, and MBSs are completely flat. Why are they flat and the markets are rallying? I'm going to go over that here in a second. So my name is Dan Frio, where our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do that? Well, I'll give you all that information at the end of this video. But without further ado, let's get to the breaking news that we have right now this morning over at CNBC in regards to the CPI. The consumer inflation numbers just came out. I'm going to show you market reactions right after this. So hang tight, folks. Take it away, Rick.
Welcome back to Spock. We are just seconds away now from February CPI. Rick Santelli standing by at the CME in Chicago. Rick, the numbers.
Yes, boy, this is a biggie. This is our February read. Consumer Price Index expected up 0.3, comes in a tenth light, up 0.2%. And in the rearview mirror, at least now, not revised. And a path 1%, by the way, was a 2-year high. We're reversing from up 0.2 equals where we were in October. To find a lower number, you're back to July of last year. Strip out the important food and energy. It remains up 0.2 on core. That's following up 0.4, which was the highest level since Feb of 23. 0.2, well, we equaled Dece of last year. Find a lower number, you're in June of last year. Year over year, headline number, 2.9 expected, 2.8 is what we get. Last look was 3%. 2.8 to find a lower number. You're in.
He already said we were at 3 and we went to 2.8. That's 20 basis points lower. That's actually lower than what was expected. We're gonna point on that here in a second. So
November of last year when it was 2.7. And do remember that cycle at the end of last year, we actually saw 2.4 on the September read, just to put a face on the fact that we have been lower. And if you look at X food and energy or core year over year, 3.1, 3.2 was what we were expecting, 3.3 in the rearview mirror. 3.3 in the rearview mirror was the highest since May of last year. 3.1, to find a smaller number, you have to really go into the Wayback Machine. You're going to April of 21 when it was 3%. Now, I know many don't look at the following, but if you look at the actual index of CPI, that goes back to 1913. Right now, we have 319.082. That's another all-time high.
not going to go back to 1913 or whatever he said. So that was fantastic news that he just gave us. So let's get over to see how the markets are reacting to all this. Green all the way across the board. Remember, this was red all the way across the board yesterday. The one piece we don't like is oil going up. Oil is up 1.8%. We're still under $70 a barrel there. So that's great news for inflation. This is good news for the markets right now. And so let's get over to see how the bond markets react in this. MBSs are up only 1. So why are the markets rallying like this, but the bond market is just sitting there, not really reflecting any of this stuff? Well, here's what my expectations are, and here's why I would be, I'm worried as well. This number is great, but let's get over to the economic calendar we have. We'll go through this. Then we have some big numbers coming out tomorrow as well that I want to focus in on. So first off, I want to show you just something that came in yesterday. So yesterday we had the JOLT index came in. That came in basically in line. But we did have a bond auction for 3-year government notes because they sell these things when the government doesn't have enough money. The interesting thing here is the last time the government sold these 3-year notes, it took a yield of 4.3% to get rid of all that debt. This time it only took a yield of 3.9, so 40 basis points lower. That's great news. Okay, so here's the data that we have so far today. Rick was going over core CPI year over year, month over month, and so forth. So let's just break down what he said. Last reading on the core CPI year over year, reading was 3.3. It was expected to come in at 3.2, came in at 3.1. Okay, so 20 basis points lower than where we were. The core CPI year over year, the core CPI month over month, last reading 0.4, came in at 0.2, so half. Then you have CPI month over month, 0.5 to 0.2, huge drop. And then 3% on year over year to 2.8. So here's my expectations or my thoughts is, and I said this in yesterday's video, if inflation starts coming down this much, would the tariffs actually make that much of it's going to cause disruptions. But what I'm saying is if inflation comes down a little bit quicker than expected, one of the things is, and the reason why I brought this up is right through here, because we have less bonds hitting the market. So in supply demand, if inflation starts coming down a little bit better than I guess we expected. Will the tariffs just bring us back up to a little bit elevated, like where we are today? So could there be a balancing act? That's what we're going to start to focus in on all the data coming in forward, because now is when all the tariffs get hit. So tomorrow we got the PPI number coming in. This is producer inflation. This is where I think a lot of bond traders are just going to sit on the sidelines right now and just say, okay, what's this number going to come in? Because if this number comes in and elevated, this is producer inflation. Most likely it's going to roll down to the consumer and start affecting consumer prices as well. So I'm going to be locking in everybody today because of this data. I don't want to go into this trade thinking if this thing comes in at point or a little bit hot, mortgage rates might spike. So there, you can see right through here with great news on the CPI, bond market's just completely flat. So this is what we're looking at right now. This is the MBS bond. It's the bond that actually creates your mortgage rate right through here. That's why it's called the MBS. It's actually flat. It's 0.01. 0. So that nothing's going on. If you got an inflation report that came in 20 basis points lower than expected, you'd think you'd see a nice rally in the market, but we're not. So the expectations I have are basically everybody's going to wait for tomorrow's PPI numbers. So let's get over to what the Federal Reserve's going to do, or what they're looking at least, because they're meeting in 7 days. So 1 week from today, the Federal Reserve's going to be meeting and telling us what they're going to do. There's a 99% chance they're going to do nothing right here. The federal funds rate currently is 4.25 to 4.5. There's a 99% chance it's going to stay there. I'll prove that to you right through here. Here's the federal funds rate right here at 4.25 to 4.5. You go across here. Here's the stuff that the Federal Reserve truly monitors, but they control this rate right here. So inflation, they look at this PCE. That actually came down at the last reading. The unemployment rate ticked up just a hair, 0.1 increase our last reading last week. We still have positive GDP, but there'll be new GDP numbers coming out. If you see this thing go negative, we got major problems, folks. But I'm expecting kind of smooth sailings right through here with all this. And then, so let's recap the day for us. So right now, mortgage rates, I'm saying they're going to be flat as a pancake today because of the CPI report. Stock market is doing fairly well, but I think this is going to calm down as well today as the market trades. And it'll be, my expectations are the Dow Jones is going to be somewhat flat today, waiting for the PPI number to come in tomorrow. A lot of NASDAQ is tech stocks and banking stocks. It won't be as affected as much as the Dow Jones industries. And then we'll continue to monitor what the MBSs do at our closing bell. But I'm not expecting any, after today's opening, which was, I'll say, phew, I'll take this as a good news for the day. So that's what we're seeing so far right through there. So let's get over to me, what I do, how do I do things. But first off, I want to do a public service announcement. And if you guys, if you email me, I'll give you a phone call. I've talked to about 5 or 6 people yesterday. And I said, did you do this yet? And they're like, no, I didn't, but I plan on it. And then we pulled credit on somebody, and they started getting phone calls, and they called, and I said, well, it'll listen to me. So please, folks, do yourself a favor. Go to optoutprescreener.com before you go in and apply for a mortgage. It doesn't matter if you're going through me or any other bank. What happens is, the do not call list thing works. Where you put in your phone number and you're supposed to not be solicited. It's the same thing with this thing. This is supposed to stop selling your financial data. So what happens is when you apply for a mortgage, when we pull your credit, and any bank pulls your mortgage credit, that data gets sold. If you want to stop that data from getting sold, just go to optoutprescreener.com. Just click right up down below, and you'll be set up with that. And you should not have your financial data sold. I signed up for it. I recommend you do as well. So off to me. Who am I? What do I do? So let me just give you the gist of it. We have the saying, one application, one credit pool, or shop your loan over 30 different lenders. Now, how do we do that? Well, I work at a federal bank, but the unique thing about this federal bank, there's only maybe a couple in the whole country that do this, and it's pretty intriguing. I have a federal license because I work at the bank, and so I'm licensed in all 50 states as well as Puerto Rico. The unique thing we have here is we set up 30 other lenders to assist us, okay? So when you apply with us, we have my products, and I have 30 other lenders. These are banks, credit unions, mortgage companies, large mortgage companies, companies you even heard of. We have access to all their programs, all their rates, even if they have perks like down payment assistance and things like that. We have the ability to use those. So how do you reach us? Because this is what we do. So I can help you if you're looking to buy that first house, maybe buy that first investment property, maybe even looking to refinance, save some money. So how do you reach me? go to therateupdate.com. There's a couple different ways you can reach out. One is you can put in your application right through there just to give you some comfort. When you do that, I don't automatically just pull your credit. It will come to me. I'll give you a phone call and we'll go through any questions that you have and maybe questions that you didn't have as well. And then at that point, if you're ready to move forward, then we'll go ahead and pull credit and get you moving forward. If you'd rather schedule a consultation, well, you can do that right through there. Say if you're busy throughout the day and you need a 1 hour spot to be able to talk to somebody, schedule a consultation with us right up there. Or you can go down to the bottom of the website and there's our 800 number as well as my email address. So feel free to give us a call at 844-775-5626 or reach me at dan@therateupdate.com. And yes, this is me, folks. You can reach me at dan@therateupdate.com. Please leave any questions that you have. If you need some help with refinancing or buying that first house, shoot me an email. If you got a comment, just leave that down below. But if you need some assistance, please shoot me an email, give us a call, put in your application, any which way you want to do it. We try to make this as simple as we can. So thanks so much for watching, guys. God bless. Have a fantastic afternoon. If you haven't subscribed, please do so right over there. So every time I post a video, you get an alert. You can learn something for the day. So that's my conclusion. Rates are going to be stable so far today. And we had a with the CPI number that just came out. So now off to the PPI number for tomorrow. Take care, folks.